Hello and welcome to the weekend review of the week beginning 22nd of February 2021. For disclaimer, please visit my website www.chartvideo.com/disclaimer. The last 4 days in Nifty has been down days. Well, have we breached the intermediate downtrend target or has the intermediate downtrend begun? Let us analyze on the chart itself and then we go to the moving averages, support resistances and indicators. First, the charts. Well, the intermediate term uptrend had in fact began just before the budget, and from 13,596 odd levels, it had gone as high as 15,431. The speed, the magnitude was quite high. However, if you count the number of days on uptrend, it was certainly very short in nature. Next, the previous top which it had made while on the uptrend has been clearly breached. Well, this I always tell you is the first support on the left hand side. For a downtrend to begin, this particular first support should be violated. Thereafter, the next major support was at 14,977. Well, market closed exactly at that level. Exact closing was 14,981. It had gone down below the mentioned level, but had recovered to close just at that level. So by any means, on Monday or the coming week, if it trades below this 14,977, one can expect the next major support to come at around 14,750 odd level, taking into consideration 21st of January's high. On the lower side, well, there is a gap. We need to check out whether this gap will be fulfilled or not, which was formed on 2nd of February. If we plot the moving averages on the supports and resistances which we just now discussed, one thing is for sure, the 13 SMA has been violated. Well, 13 SMA slope is also changing. It has flattened a little. The slope of the 13 SMA was clearly up. It has changed and is quite flattish in nature. And in that case, if the 13 SMA is not surpassed, the downtrend may continue. The 13 SMA is at around, as of now, 15,100 level. The 30 SMA presently at 14,670 odd level has got a still an upward slope. Perhaps that may come and merge with the levels of 14,750 in coming days. Well, we need to check it out. The last time, the major reversal came from the 50 SMA, which is at present at the level of 14,300. So for me, as per the moving averages, it is very clear that if the 13 SMA, which is at 15,100 level, is not crossed, the downtrend may remain intact, and on the lower side, the weight of evidence suggests that we may head for 14,700. Well, on the brighter side, if the 13 SMA is crossed, certainly the uptrend may again resume, and we need to check out in that case whether this 15,257 is crossed or not. If you ask me, भैया शॉर्ट करेंगे कि लॉन्ग करेंगे, पल्ला शॉर्ट की तरफ भारी है. Let's check the indicators, the other parameters before coming to a final conclusion. The RSI is clearly exhibiting negative divergence. We had discussed this point, but all the same, what I always point out, that please have a look at the equilibrium line. The RSI is still above the equilibrium line. As long as it maintains above the equilibrium line, well, the trend in that case would remain on the upside. In coming days, if this is violated, mind it, we are already into 4 days of downtrend and the indicator has still not reached the equilibrium line. So there is some hope for the bulls from this particular set of indicator. Let us see how it unfolds itself in coming days. Certainly, the equilibrium line will be watched out for on an intermediate term time scale. The ADX is currently giving you signals of a trading market. The ADX is gradually moving downwards. Well, it is showing signs of divergence. Divergences are there, but that doesn't mean that it will be turning right away from the upper side, because the value is currently quite high at 32 odd levels. The 30-minute ADX, as you can watch it, has a very considerably big divergence, which we had discussed last week, and thereafter the ADX is moving up, presently placed at 33 with an upward slope. Well, strong long-term divergence on ADX, mind it, here I'm talking on 30-minute time frame, so long-term might well be 10 or 15 days time duration. Divergence of quite a long term, thereafter ADX moving up, is certainly a signal that the momentum on the present trend might be strong in nature, and the present trend on the 30-minute chart is certainly on the downside. डाउन डाउन तो कहते जा रहे हैं, बट अब कब सोचेंगे? The RSI on 30-minute scale in Nifty is giving you a clue. Well, in case this type of situation happens, we may have to think, well, the trend has changed. What is it? Presently, the RSI has come into the oversold area and has moved back. It is placed at 41 odd levels. In case if we see signs of the RSI stabilizing above 50, well, that can be taken as a signal. Perhaps the downside move is over. Again, the upside may resume. In case the indicator fails to stay above the equilibrium line, falters here, comes down again, well, the downtrend will stay. Just going by the RSI on 30-minute Nifty, it seems presently it is in downtrend. In case it reverses, we will also reverse, but as of now, we will like to trade on the downside. The ADX on 60-minute time frame too is moving upward, presently at 35, and had come down way down to levels of 15, and in the course had shown divergence also. This is also suggesting perhaps downside move may come up. Go to the RSI. Well, same story. It has just reached the oversold area. Oversold area does not mean that a reversal will come up. The previous time it had reached the oversold area, it had gone down way below the oversold area, and then only it had moved up after showing positive divergence. Here it has just moved into the oversold area. Let's see what comes up. Perhaps a short-term move may come up, but all the same, divergences, any positive divergence is missing here, and the ADX is also suggesting downside move. Perhaps that is to continue. In case, here too, in case the RSI moves above the equilibrium line, stabilizes, well, can't help it, in that time our views will change. But till that happens, we should assume that the market is heading south. Put call ratio is presently placed at 1.19. It's time for a detailed discussion in put call ratio. Let's see the chart. This is graphical representation of put call ratio from 1st of January 2020. Well, almost 13 months of data here. I had showed this particular chart just a day before the budget. On a day before the budget, the put call ratio was placed somewhere around 0.89 and had moved up. Fine, but I had also discussed that the way it has broken down, most likely put call ratio now would be getting a resistance at around 1.55 to 1.6. Previously, we had lofted levels of 1.7, 1.8 and even 1.9 once, but most likely, that was what I mentioned, that most likely such lofted levels may not come up. Well, here the put call ratio moved to 1.6 odd level and had again moved down to 1.19. There is certainly a shift of stance from the higher level to lower level. Put call ratio stabilizing at lower level is in a way signal that perhaps that the upside move might be over. Even if it is not over, even if the market does not go down in a major way, the upside also might be capped somewhere down the line.
Hi guys, me and Gautam have collaborated to bring a new course called Decoding Volume and Open Interest in futures. Now what we are doing out here is we are going to analyze volume each and every days, what they say about the stock, what is going on in the stock. Then we take an indicator based approach to understand the volume cycle of a stock. The indicator is distributed freely in terms of Metastock, AmiBroker and TradingView code. After we analyze volume, we go to open interest, what open interest means, how open interest build up, what Y tells you about the nature of the stock, what is going on underlying the stock. Then we show you what is cumulative open interest, how to create a COI chart, and we also distribute an app free for lifetime where you can maintain your own COI database, look at it graphically and see how the cycle of a stock is changing. Now the app is free for lifetime. It does not need a data source. You can use the NSE Bhav copy to update the app on a regular basis. So after that we come to a quantitative model which is proprietary, which incorporates price, volume and open interest and picks up stocks which are about to take a large move. From a swing trading perspective, say 5 to 10 days, 3 days, 8 days, whatever. We teach you a method where to enter, how to give a stop loss and stuff. So that particular list also helps you to pick up stocks out of 140 future stocks on those stocks which are going to make a move. This particular course is purely positional in nature. But if you are a day trader, the stock selection, that stock's about to make a large move, you can keep that on your watch list because in the next 3 to 4 days, stocks generally move during the day. So for day traders, it solves a problem of stock selection for day trading. This is all about the course. Me and Gautam have put our best into it. I hope you appreciate it. Thank you.
Welcome back. The market created a recent top at 15,430 on 16th of February 2021. Well, here I am speaking about Nifty futures. In my previous week, I had said that, well, there is no sufficient OI build-up, open interest build-up for the trend to continue. We are witnessing a correction thereafter. Mild short build-up has taken place, not in a major way. All the same, we would suggest it this way that open interest was lacking when the move was going up. A very mild bearish mode has come up. No major buildup has taken place, but all the same mild bearish mode is also bearish, and in that case open interest is also suggesting southward movement. Coming to Bank Nifty, well, the situation here is quite clear and it is on the southern side. Let us see. The first support which was here has been violated. 1. 2. There was a gap at this place. The gap has been filled. There are two major signals which are suggesting, well, the downside move may have begun in Bank Nifty. On the lower side, the first support comes to at around 35,450 odd levels. Let's see, most likely we may get that particular zone. Here too there is a gap at 35,413 and the gap was created on 5th of February. We need to check out whether the Bank Nifty comes and halts here or not. In case this particular level is also taken out, the next major support comes in the form of gap which was created on 2nd of February and the tops which are way down, almost 3,000 points down from the present level. First thing first, well, we will be keeping an eye, but as of now, the first major support is the gap area which occurred on 5th of February. I'll be looking out for this particular level. If it violates, so be it, we will check it. The RSI, well, is coming down presently at 62, well above the equilibrium line. And ADX perhaps is giving a signal that the trending mode is no longer there. The ADX is exhibiting divergence. The RSI here has given you a divergence trap. Thereafter, it is moving down this signals downside move. ADX in 60-minute chart of Bank Nifty, well, the downside was not supported on Friday by ADX. That's it, but all the same, it is at around 30 level and it has slightly burst upward. By any means, if we see ADX moving up further, it might be taken as a U-turn. The previous time, watch out, the U-turn was taken from here and we had a major strong upside. The U-turn was taken from here, we had quite a major strong upside. In case if we have a U-turn here, we need to watch out the dominant DMI. Well, presently the dominant DMI is MDI. It may change, but if it moves along with the MDI, then in that case, a strong downside move may come up. Here by strong, I am checking out on an hourly front. Well, strong can be for a 3 or 4 days time period. So much so for Bank Nifty and Nifty. Well, सर पे बंदूक रख के अगर कोई पूछे तो क्या करेंगे? यहाँ पे कहानी साफ है, हमको तो लग रहा है शॉर्ट करना ही ज्यादा समझदारी होगा. Might be you may have a very brief rally. In that time, that rally should be used to sell. Of course, stop losses have to be kept in mind. Coming on to our next segment, the list of stocks. I'll be just giving you the set of stocks. It is up to you to analyze and up to you to trade. Those who have been following my videos earlier, those who have been following my Twitter posts, they all may get clues from the videos and the Twitter posts which way the stocks may move. Well, watch out 5 stocks: Adani Ports, Amra Raja Batteries, Coal India, Ashok Leyland, and IDFC First. So much so for this week. See you again next week.